The 2008 financial crisis was one of the worst economic disasters in history. Banks collapsed, stock markets crashed, and millions of people lost their jobs and homes. But what happened after the crash? How did it change the economy, the financial system, and even our daily lives? In this video, we'll break down the long-term consequences of the 2008 financial crisis and why its effects are still felt today. Let's dive in. Segment 1. The immediate aftermath. Global economic shock. The crash of 2008 wiped out trillions of dollars in global wealth. Governments had to step in to bail out banks, rescue financial institutions, and prevent total collapse. Immediate consequences: stock markets crashed. The Dow Jones lost nearly 50% of its value. Unemployment skyrocketed. Millions of people lost their jobs. Foreclosures surged. People lost their homes as banks repossessed properties. It was a financial disaster on a scale the world hadn't seen since the Great Depression. Segment 2. The bailouts. Governments stepped in. Governments worldwide had to act fast to prevent a complete meltdown. In the U.S., the government launched TARP, Troubled Asset Relief Program, spending $700 billion to save banks like Goldman Sachs, Citigroup, and Bank of America. Who got bailed out? Banks and financial institutions. Prevented total collapse. Auto industry. General Motors and Chrysler received billions to stay afloat. Stock market recovery. Central banks cut interest rates to historic lows. But while Wall Street got bailed out, Main Street was left struggling. Segment 3. How the crisis changed the job market and housing market. The 2008 crisis didn't just cause short-term damage, it reshaped the economy for years. Job market changes, wages stagnated, many workers saw little to no pay raises. Gig economy. Boom. Companies started relying on freelancers and contract workers. Higher unemployment. Some industries never fully recovered from mass layoffs. Housing market. Fallout. Home prices crashed, then skyrocketed. It became harder to afford a home. Stricter mortgage lending, banks made it tougher to get a loan. If you've ever struggled with job security or housing costs, this crisis played a role. Segment 4. How the crisis led to new regulations and reforms. After the crash, governments passed new laws to prevent another financial disaster. Major reforms: Dodd-Frank Act 2010, stricter banking regulations to prevent risky lending. Stress testing for banks, ensuring big banks could survive future crises. Consumer protection laws, stopping banks from exploiting borrowers. The goal: never let a crisis like 2008 happen again. But did it work? Segment 5. The long-term impact. Are we still feeling the effects? Even today, the 2008 financial crisis still affects our economy. Lingering consequences. Rising wealth inequality. The rich recovered quickly, but many working-class families never did. Massive government debt, bailouts, and stimulus packages increased national debt. Low interest rates fueled new bubbles. Housing, tech stocks, and crypto saw massive surges. Some experts say we're still paying the price for 2008. Segment 6. Could another financial crisis happen again? Could history repeat itself? Some analysts warn that rising debt, inflation, and risky market behavior could lead to another economic meltdown. Possible future risks. Housing. Bubble 2.0? Rising home prices could trigger another crash. Tech and crypto bubbles. Overinflated markets could burst. Banking system weaknesses. Some banks are still engaging in risky practices. Have we learned our lesson, or is another financial crisis on the way? So, what do you think? Are we still feeling the effects of 2008, and could another crash be coming? Let's discuss in the comments. And if you found this video insightful, don't forget to like, subscribe, and hit the bell for more deep dives into finance and economics. See you in the next video.